All right. Becoming a Forex trader. Welcome, Hi the Man. This is Isaiah. All right. Last episode, we talked about creating your formula. Creating your formula. We learned how to create a formula to generate a consistent income so we can grow our accounts. The key is to grow our accounts because we just don't want to get into the Forex market and be like, we're just going to make some money because then, boom, we can easily just lose some money. So now what we do to discipline ourselves because money clouds our mind, it clouds our judgment, so we stick to a formula of understanding how to manage our risk and our gains so we can consistently grow our accounts, that consistent income at the end of the week, at the end of the month. You've seen that growth and you're like, I made money, you know and that's basically what we discipline ourselves on. So now it's all about reading the charts now. Understanding the terminology. So this episode is going to be based off like understanding the terminology in Forex so you can follow along in reading a chart. You want to understand what a candlestick is. Understand what a pip is. How you're making money from a pip. Uh, Reading the actual charts and the quotes. So let's go into this. How to read a chart. So if you pull out your phones, you got your MetaTrader 4 app. You got your quotes on the far left. Right here, let's zoom in. So click here on the quotes tabs. Let's just go over some so we can just get used to the majors right here. So this is the euro versus the USD. And that's how you would properly say it. Is the euro versus the USD. This is a currency pair right here. So, and I'll teach you guys the actual exchange. The exchange, a lot of people invest their money in, but they don't know the actual exchange rate of what's going on. So people's investing money into currencies but don't know the actual exchange rate, but still making a lot of money. So we're gonna actually know what this is as traders. So this is the euro versus USD, the Great British Pound versus the USD, which is the United States dollar, and we have the USD, United States dollar versus the Swiss franc, and then the United States dollar versus the Japanese yen, the European dollar versus the Great British Pound, the Australian dollar versus the United States dollar, the United States dollar versus the Canadian dollar, the New Zealand dollar versus the United States dollar, the the euro versus the Japanese yen. And can you guys do this one for me? Just do it in your head real quick. Great British Pound versus the Japanese yen. Most of y'all probably got that right. Alright, so you'll if you click on this tab, you'll find many more pairs based off what broker you have. But these are just some I had on mine. So let's go. Now we're done with the quotes. So this is how you'll read the quotes on the quotes page right here and see the different currency pairs. And it does matter what currency is first. So the European dollar versus the United States dollar. 1 second. Alright, we're back. So we just did all the currency pairs right here. And it does matter what currency does come first. And I'll show that in the next few slides, why that's important. Alright, so charts. Go to your MT4 and open up the charts. So this is what your charts will look like. Yours will look a little different because you can customize the actual settings on your MT4, what you want the bullish candlesticks to look like versus the bearish candlesticks. And what those are basically the candlesticks that goes up or the candlesticks that goes down. And I'll explain that in the next video what a candlestick is precisely. You know. So now we'll just focus on just reading what a pip is and stuff. So I'm gonna open up my trading view. So TradingView, I just go to tradingview.com and I use this website to look at the charts on. I recommend this website to everybody who's like looking at the charts from their computer. If not, you know, you can just stick with your phone and look at the charts like this. It's the same thing. Alright, so on TradingView, I'll just discuss about the exchange rates, and then we'll come back and I'll teach you guys what a pip is. So we'll learn about that. Alright, so this is what the charts look like on TradingView. And let's see. Yeah, so this is what it looks like on TradingView. And this is the European dollar versus the United States dollar. So the currency that's first is equal to the number of the second currency. So what this means is whatever the first currency is, it's going to have 1 European dollar is equal to whatever the exchange rate is right here. As you can see where the mouse is, it's 1.17. So that means 1 European dollar is equal to $1.17 of United States dollar. And let's go back. I'll give you guys another example. So this is the Australian dollar versus the United States dollar. And what's happening here is 1 Australian dollar is equal to 0.76 United States dollar. So one Australian dollar is equal to 76 cents in the United States. So that's exactly what it means. So going back, boom. So it's the same thing here. The first currency is equal to the number of the second currency. So 1 European dollar is equal to whatever the exchange rate shows here for the current price in the market. So this isn't the actual price right now. I just scooted back some to give you guys the example. Like I can scoot down way over here and we can use this for example. And I can give you guys another, boom. So 1 European dollar is worth $1.16 in United States dollar currency. So yeah, it's the same everywhere. And now what you guys need to understand is what a pip is. And I'll go and explain what that is right now. So let's go to these slides. Alright, so what is a pip? What is a pip? So you know what the exchange rate is. We just went over that. And the exchange rate for, let's say this is the euro versus the USD. So every 1 euro is equal to $1.18. So what is a pip? Let's go to the next slide. A pip is a price interest point. So that's the definition of a pip. Is a price interest point. It's a fraction of a penny, the fourth decimal of an exchange rate. So these are bold and bigger because this is where the pips will be at right here. The fourth decimal. And every time this goes up by 1 pip, right here, this is so if it goes up by 10 pips, this will be like 32 right here. And just to give you like a clear understanding of like how the penny is right here in the second decimal and a pip is in the fourth decimal right here. So if we go lower, boom. 100 pennies is equal to $1. So if this went up 100 pennies, this whole dollar would change. But 100 pips is equal to 1 penny. So if this right here, the fourth decimal, if this goes up 100 pips, then the penny will go up. It's 1 penny. Boom. So let's give you a little bit more of an example. We make profit from every pip we collect in a trade. How much money we make from each pip is based off how big our trades are. Let me back out here. Okay, so this is another example. So we're buying the Euro USD at the exchange rate of $1.1822. $1.1822. So it goes up 100 pips. So that means the exchange rate changes from $1.1822 to $1.1922. And so that's 100 pips right there. That's basically what a pip is. 100 pips make a penny. So a pip is a fraction of a penny. The point interest price. Alright. So we're just going to be making a lot of money off of these pips. So we're basically looking at currencies go up and down in value by fractions of a penny, like throughout the whole week, and we're making money from that. So what is a lot size? So demo traders graduate typically. Demo traders graduates typically start off on micro lot sizes. Why? Because that's where you will want to make all your mistakes from. Is like when you first go live, there's going to be mistakes or whatever. So you want to start off small. You don't want to start off, losing or making like hundreds of dollars. You want to be able to have a controlled amount, which is on micro lot sizes, whereas you're only losing pennies or dollars, and you're getting more consistent, on the live account. So that's why you'll start off with micro lot sizes. But what a micro lot is basically a trade of an average of $20 investment, and it means for every 1 pip, it's 10 cents. For every 1 pip is 10 cents. So you see how we made 100 pips off of this trade right here? So that means 100 pips, that would be $10. 100 pip trade is $10 right there if we did a micro lot size. So let's see. After getting consistent profits, micro lot traders usually go on to mini lots and make consistent bigger profits. Obviously, because it's a bigger investment. So usually a mini lot is an average investment of like $200 in a trade, where 1 pip is equal to $1 in a mini lot size. And I'll be going over the lot sizes in season 2, where I'll be going in discrete detail at how to manage your equity. But right here, we're just going to go over a brief review of what these lot sizes mean and the terminology behind them. So let's see what we have next. Standard lot sizes. Standard lot sizes are $10 per pip. So let's just go back one. So the same $100 pip trade, if we were doing $1 per pip, that's a $100 trade right there in a single trade. So it's the same thing with the standard lot size of an average investment in a trade of $2,000. 1 pip is equal to $10. So a 100 pip trade, that's a $1,000 trade right there. That's a $1,000 trade. Alright, so what we have here. Micro lot sizes, mini lot sizes, and standard lot sizes. These are the three major lot sizes uh, that people usually jump from. So you don't want to start off with the standard lot size and jump back down to a mini lot size after you get scared after losing the trade or whatever, because it just doesn't work like that. You want to build from a micro lot size. Start off with a penny per pip, 10 cents per pip, and 20 cents per pip, and then keep going up. Build into a mini lot size. Do $1 per pip, or $2 per pip, and then go into the standard lot sizes. Uh, Standard lot sizes is usually where people end up, usually changing their whole financial situation for the good or worse, because it's such a major lot size. There's so much money that you can make in each pip, as you can see here. We'll go into that later. But right now, I want you guys to just know the terminology behind it. So let's give you an example. So we're buying the Euro USD again. It goes up another 100 pips. And, I did the example right here. Got you right here. So the micro lot size, if it was going up 100 pips. Mini lot size, if it was going up 100 pips. And the standard lot size, if it was going up 100 pips. This is how much money you'll be making from that single trade if you were to do a mini lot size trade, or a standard lot size trade, or a micro lot size trade, and collect 100 pips. And that's how we make money from pips. We just choose the value of the pip. Just like, okay, I want this trade to be making 20 cents per pip, or $2 per pip, something like that. So I'm gonna give you guys an example of how much you can make using a visual trade. Calculator. Here we go. Oh, perfect. Look at this right here. Let's just say if we were selling this one right here. All right. What am I looking for? Boom. If we just started selling right here. If I gave y'all a signal, or you just seen, for whatever reason, you just started selling. From right here, let me see what this looking like. Ooh. That's about, let's say that's like 200 pips. If you just caught this whole drop going down. Your trade, you enter right here, and you started selling, and it dropped down 200 pips right here. Let's say you got 200 pip trade. 200 pip trade. Let's say you was doing a standard lot size, which is what? That's what it looks like, and that is $10 per pip. So 200 times 10 is 0. Here we go, folks. In a single trade, you just made $2,000. So this is just an example of the opportunities that you can make. You can make happen in Forex with just understanding what you're looking at. See, and these are candlesticks, too, by the way. I'm going to go into that in the next video and explain what each candlestick is, different type of candlesticks. But yeah, just getting into a trade like this, you make $2,000 in what, just a few hours. Get out of this. Boom. Let's go over what we learned. So it's just a review of how to read the charts episode. So we learned how to read the quotes on your tab, understand what Euro versus USD actually means and the exchange rate of it. So €1 is equal to, it's like $1.19 right now. No, actually, yeah, in 2018, yep, it's like $1.22 right now for each euro. Um, we learned what a pip is, like a price interest point, and how we make money off of each pip. Learned about the three major lot sizes, then the exchange rate. So yeah, one step closer to actually being in the market and being able to have that knowledge and foundation to trade on your own. To just take notes and just keep studying. Like we're gonna get this. We're gonna get there. We're gonna be making money off the markets in no time.